The government and Singapore Investment said its investments fell by more than 20% in Singapore dollar terms in the year ended March 31st, and it continues to have a loss on its UBS stake. David Cohen, Action Economics, joins us here in the studio. What do you think of the assessment? I mean, what's your assessment of the numbers that we saw this morning?
They were certainly understandable. There was no, as a major portfolio investor, there was no escaping the global market problems last year, and they were able to participate in the rebound over the past 6 months, trimming their losses, since March. So, yes.
Let's face it, though. I mean, they're supposed to adopt a conservative strategy, just like Temasek, but that's a huge loss.
Unless you want to go hiding in the corner, you're going to be exposed when the global markets suffered the sharp losses that they did last year. And I think that's the point that GIC would make, that they are a diversified investor with a global perspective and long-term perspective, and they just have to be prepared to tolerate something like the events of 2008.
That stake in UBS, still very problematic, still not making money. What should GIC do with that stake?
Well, certainly that they might have regretted having taken that stake in UBS, but going forward, they can argue that the shares are priced fairly right now, and they can expect a return on their investment as UBS writes its course.
It's come out to say that UBS will take a long time before it recovers. Fair assessment?
Yeah, I mean, they certainly suffered their problems, but again, they can make the appropriate corrections and rebuild their position as a major bank in the world.
Let's follow up on that. I mean, in terms of allocation of assets, how do you see UBS doing that? Is there a sense you're getting from the bank?
I think that they again, continue to be a major player on the world stage, and they'll look for the attractive investments in parts of the world. I mean, no doubt Asia will attract an increasing portion of their total portfolio, given the fact that Asia will continue to pace world growth, and I think portfolio investors everywhere are looking in that direction.
In terms of lesson learned, what do you think is the biggest and most important lesson learned from this whole debacle? I mean, Lee Kuan Yew has come out to say that perhaps GIC moved in too fast when it came to Citi as well as UBS.
Yes. I think patience, the fact that they have trimmed the losses by half, and even in the case of the Citigroup investment, that turned out to be pretty astute, the way selecting preferred stock rather than the common stock where they would have done a lot worse, and the fact that the markets have turned around, I think it highlighted that patience is clearly a virtue for a portfolio investor.
Should sovereign wealth funds, the likes of GIC, the likes of Temasek, be tweaking their strategy when investing?
Oh, on the margin, maybe they're a little more aware of the risks of in the market, the need for some liquidity, but and the risks of the financial sector and real estate. But nevertheless, I think they still would just look to keep a diversified portfolio, trying to take advantage of whatever particular insight they might have in this region. But again, global investing will remain their catchphrase.
Risk appetite. How much risk appetite should such SWFs have?
Well, I think they recognize that in order to achieve a return, you have to be willing to tolerate a little bit of risk, and as long as you diversify, that would.
It's a lot of the people's money, though, Dave.
Yes, but if you want to earn a return, you have to take a little bit of risk, and then the appropriate approach is diversification. And I think that they handle that pretty well.
Given the current scenario, in your opinion, what strategy should be adopted in the next perhaps 5-10 years down the road?
Patience remains an important virtue, and they demonstrated that, and I think they'll continue to do that.
keep a diversified portfolio as well, right, Dave? All right, Dave Cohen, Action Economics, joining us here in the Lion City.